What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 30th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And before you guys jump to conclusions on the title, I want to make it very clear, I'm not selling my crypto right now. I'm still in the market, haven't changed a thing since the last couple days, right? So I'm still here, it's all good. But I want to spend some time to talk about a very important topic, one that many people don't want to discuss, especially in sectors like cryptocurrency, that's very brand oriented, where people are very committed to their investments. And that's the concept of taking profits. Look, guys, at the end of the day, I not only want to spend some time to discuss taking profits and why it can be important, but outside of that as well, some of the signs that you should look out for and the broader concept of why it's important to realize gains in any market, even cryptocurrencies like Bitcoin. And that actually leads me to a good starting point here. This topic has been something that I've gotten a lot of people asking about, but it really flowed over in my inbox when Tesla came out discussing that they had sold some of the Bitcoin they bought back a couple months ago. And a lot of people freaked out when this headline came out. I did too, because it read in so many news outlets as if they just sold it all. And yeah, maybe that would have, almost felt like a cigarette burn in that case on my arm. It would have been a bit harsh in that case, to have so much faith in Tesla for making such a major Bitcoin buy order of $1.5 billion and now selling it all. But in reality, they didn't do that, right? And it's important to get past the FUD and the noise here. In reality, what Tesla did was, and this isn't, bear in mind, just Elon making this decision, what Tesla decided to do was sell a portion of their original $1.5 billion position. And in fact, it seems like they would have sold, maybe in this case, if you're doing the math here, let's say we rough it off to 300 million, right? Some people would think in this case that Tesla sold 20% of its position, when in reality, not only would that not be that bad, they really actually only sold somewhere around 10 to 15%. Because their original position here had grown so much in value. And that's an important point to keep in mind here. No matter the specific percentage, there's two key things we need to keep in mind here. Tesla only realizes those gains on its order book, right? In order to be able to do other types of business and operational expenses if it goes into cash. Right? Bitcoin isn't widely adopted yet in the world. And the same goes here for any kind of investment, for selling stocks, etc., or selling your property. If you want to go use that capital elsewhere in the world, the reality of the situation is that currency still is king in the sense of being able to buy goods and services. And outside of that as well, let's be very clear on something. That's Tesla's business, right? Now they have to report these things because it's financial reporting. They're a publicly traded company. They have to do this on a quarterly basis and be transparent about their balance sheet. That being realized, it's not my business to tell Elon or Tesla what they can and can't do. Sure, maybe it would be a bit of a bad stain if they would have taken the narrative that Bitcoin is the next major currency and it's our treasury reserve asset, and they sold it all. That'd be a little bit different, right? That might sting a little bit more. But even at the end of the day, whether it would sting or not, it's their business. And this leads us towards a very important topic we need to talk about here, which is your personal journey of taking profits and knowing what signs to look out for in the market. So let's go ahead, let's dive through it, let's talk about this, especially at a time here where on the technicals, Bitcoin has started to set in lower highs and lower lows, right? A very valid time period to start talking a little bit about this. Now again, I want to reassure you guys, I haven't sold any of my crypto positions in the last couple days, I think last week or so. More than anything, it'd be me moving from one crypto to another. So I'm not exiting en masse to fiat. I'm not planning for it anytime soon, but it could come. And we have to know what kind of signs we need to look out for. So again, let's answer the simple question here. Is it okay to take profits? I'm going to give a screaming ovational yes in this case. Yes. It is okay to take profits, guys. In fact, it is the right thing to do when you have made absolutely sizable returns. And if you're not planning on doing it soon, at least knowing the signs to look out for, right? If you're not convinced that it's okay, right? Maybe after this video, this could help some of you guys. And I actually have a very interesting perspective compared to most. Whereas a lot of people have a very kind of fixed strategy in this case, I'll talk about how there's a few different methods to approaching it. So there's a few things to keep in mind, right? Let's go ahead and dive into these one by one here. First off is tax implications. This is going to be probably one of the most boring but most important ones for you to understand when it comes to buying and then therefore selling crypto and realizing gains. A lot of people out there in the crypto space are so eager to jump into becoming a trader, right? And not only is trading going to probably not spell well, especially very active day trading for most people. Most people do not know how to time the market. They let the emotions get to them. And at the end of the day, as much as people want to think they can be a part of that 5% who may make a profit trading and outpace their original portfolio in crypto, right? At the end of the day, it is not favorable for most people, right? And I'll say that candidly, there are some markets that I didn't trade very well when I got started. Forex was a bit difficult for me, right? I'll say that candidly. That was a market that I could not day trade, and I tried it, and I lost money on many occasions, right? So it's not only important to understand in the sense of how you're approaching markets, but outside of that as well, the tax implications that come with it. And it's kind of a 2-point issue here, right? Not only how you approach markets is very important, but how you approach markets is going to lead to different tax implications. So for example, in countries like Germany in this case, right? And this goes not just in the United States, like where I'm from, right? In countries like Germany, the tax implications of holding crypto and realizing gains in a 1-month period versus a year, 2, 3-year period is very, very different. What's generally known in the United States as short-term capital gains and long-term capital gains. You will pay a higher percentage on any profits. It doesn't matter in this case if you traded or if you were a long-term investor, right? Depending on the time frame from when you bought and sold to realize those gains, you are going to have different tax ramifications. And the shorter the time frame, generally speaking, whether you're a day trader or a swing trader, the higher those implications are going to be. So you need to realize that when you're selling a position, because if you've held a position for 9 months in this case, right? 9 months. It may be that you'd want to wait an additional 3 months or whatever the period may be to realize long-term capital gain taxes that might be half of the penalty in this case of short-term capital gains. It really depends on your jurisdiction. And there's a lot of tax laws you guys can look into that really actually aren't that overwhelming. You can do the math actually quite simply, or you can talk to an actual tax attorney in this case who can walk you through, or use software like TaxBit, etc. The question next is, where to next in your investments? And I know usually you guys will not see some of these points here, but I think this is a very critical one here. Where are you planning to go to next, right? There are real world factors in this case that we have to consider when it comes to our capital, and that is inflation, right? That's probably the biggest thing you have to worry about, the depreciation of the value and the purchasing power of your currency. And outside of that as well, assessing other options. I know a lot of people say you don't have to go straight into another investment, and that's actually very true. There are some very good opportune times where cash is king, and again, you don't want to rush into anything. But keep your eyes open about other opportunities. And this is why I always promote a macro trading philosophy. Maybe you don't have to invest in cryptocurrencies. Maybe you can take profits and move into another market like equities, or into fixed income assets like bonds and treasuries, or commodities like gold and silver, right? Keeping your mind open to the idea that there might be another market to go into that you can reallocate your capital to, where you'll temporarily go into cash and move over to the next asset class, could be very valuable. Right? Just keeping that in mind. But again, not feeling forced to go into anything. That's a very important point. And the last third point here for things to keep in mind is establishing a reentry plan. Now, we're going to go ahead and talk a little bit about this as we go throughout the video. But again, just want to toss out some examples here, right? If you do feel like you'd want to get back into crypto, if you feel that this is the peak of the market, but you want to come back on the show, you love cryptocurrencies, you hate to admit it, but you've got that kind of emotional tie to not only the exponential potential you think that the space holds, but also the emotion behind what crypto stands for, right? Those are real valid things. People emotionally invest in Apple, even though they might, whether they like the financials or not, or Amazon or other companies, right? If you generally emotionally resonate with something, there's probably a good actual investment case with it, right? There's probably a reason you love Bitcoin and what it stands for and what utilities it offers. So the thing to keep in mind here is to not emotionally get back in, right? When you're investing or trading, depending on the time frame, it is best not to get caught back in just because you love something, but to make sure you get it at a historically favorable discount. And I can list some examples. With Bitcoin, it's tended to be that most full bear market corrections from top to bottom go down about 80%. There's a ton of data science models Whether it be, for example, the 2-year MA multiplier in this case, the stock to flow, etc. There is a whole range of data science models you can utilize to figure out where we are in the cycle and if you're getting that optimal discount, right? And we can do a video if you guys would like me to kind of dive through some of those data science models in another video. I'm happy to do that. But in the interest of time, we're going to go ahead and move into our next point here. So signs that it may be time to take profits. These are the broad overarching points that I think are very important to keep in mind. Okay, and they're actually very simple things. Right? Again, I'm a very kind of street smarts kind of person. At the end of the day, guys, I'm not book smart in a lot of areas. There's some areas I wish I could excel better in. But there's a lot of key things that you can just observe in markets as they're very psychological that will help you in understanding where we are within a given cycle and whether or not it's time to take a step back. So let's go ahead and talk about these. And they really honestly apply to a variety of markets in the world. This can apply to equities or stocks generally in this case as well. So first off is making life-changing returns. If you were lucky enough to get into a market like crypto back in March of 2020 to June of 2020, right? You got Bitcoin below 10K in this case, and now you've made a 5x return, or maybe, for example, for you in this case, it might be that a 2x return can be considered life-changing. It could mean that you could have put a down payment on your house. You could have paid off your student loans, debt that would be crippling for most people in this case. Or you've made seismic returns in Bitcoin or altcoins that's up 10, 50x, etc. Right? Greater or less than these values that I put here, right? It doesn't really matter what the percentage is. If it's life-changing to you in this case, there's 2 points to consider. Not only that, you should probably take some off the table if you have debt or other expenditures or have something that you've really, really wanted throughout your life. And I say that as a non-materialistic person, as someone who's quite frugal when it comes to my money, not in the sense of spending on others or doing other things like that, but really just, I always ask, do I really need something, right? But if I had debts and I had other obligations in this case that I needed to pay down, I would certainly sell some of my crypto to get rid of that. You want to live debt-free, live free of that stress. It is so difficult to put a price tag on that. It's completely immeasurable just how important it is to remove obligations and things of that sort within finance. And it's financial literacy 101 to pay down debts in this case, right? So again, taking some profits off the table might not be a bad idea at Life-Changing Returns. Doesn't mean you have to sell all of it. And it can be, in this case, you just sell a portion, or you at least set a plan to do so in the near future. Right? Next up here is Parabolic Price Action. So I just want to go ahead and I'll bring up an actual example here when we take a look at the Bitcoin chart here. And this kind of showcases a point that I brought up earlier about the corrections that we saw. Right? But even though the corrections in Bitcoin can be quite brutal, we also have these periods of time where from the bottom to the top, we have absolutely crazy rallies. And you can see here that even as we look at the logarithmic chart, which again is going to, bear in mind, it's going to showcase things in a less kind of parabolic nature, as it's showcasing the actual percentage-based growth here versus just showcasing obviously the greatest numeric increase in value, making the rest of history kind of unreadable here, right? We can still see here that momentum builds up in the later phases of the cycle, right? Things start to go even more vertical towards the end of it, right? Not just in the actual dollar increase, but actually in percentage as well, right? And we can see here, we could turn on the percentages here, right? And see just how crazy crypto can return here in the long run, right? So again, it's important to note that the more and more euphoric and parabolic we get, and when you start to see stagnation in that parabolic action, right? And we're looking at the monthly chart here, so each of these candles represent a month. We can see here that, it's not a matter of just timing the top. It's knowing that when there's a very clear sign here on the chart that that momentum is starting to stagnate, right? And knowing when to take your cards off the table, cash in your chips at the casino, and walk away from the table, right? I don't mean to, just label crypto as a casino in this case. My point here is very clear. When you're going into a market, you're either going to win or you're going to lose, right? That's a very important thing to know when to step away. When you know that you were on the right side of history and you've been able to materialize the vast majority of this run-up. It's not about timing the absolute top. So And this kind of plays in here as well. When everyone wants to buy into, who wants to buy in, who previously ignored the asset, right? So when all your family and relatives and friends and peers that you know about, maybe your old classmates in this case, who never really talked to you, but now want to get your investment advice. I've been there on that one. Basically, if people are reaching out to you about crypto, who previously never chatted to you about crypto, or maybe you tried to tell them about it before and now they're really eager to get in on it, it's probably a good sign to step away a little bit, start setting your game plan to get out, right? And I'm not saying you can't help them set up their Coinbase, but probably, do the right thing and say, hey, you're probably coming in the later half here, right? I've had to do that for a couple people, and unfortunately they don't listen, right? And you can't help that. That's their decisions, right? But you can at least use them as a gauge in this case. You just have to. Right? Use them as a gauge to understand that, retail, the everyday individuals in this case, tend to get in at the top. I try to scream to the roof of the time in the market when it's more optimal, looking at the data science, all the models. But again, I can't provide financial advice, and even if I could, not everyone's going to listen to me. All right. Anyways, next up here is signs and methods for reentry. So we talked about building in a reentry plan here. Well, what are some things we should keep in mind? Well, you guys might have noticed earlier, I mentioned the 80% correction value in the market, which is historically, again, as we take a look here at the drawings art chart, apologies, I'm going to go ahead and get rid of my upward bound drawing here. You can see here that for the last 3 major bear markets that we had in crypto, we had a 93% correction, 86% correction, and 84% correction. What you'll notice here is that the bear markets are declining in percentage variance in this case, right? We had the harshest one back here in about a 5-month period. We had a 14-month bear market here of 86% and a 12-month bear market here from top to bottom of 84%. You can see that they're getting less severe, but also it's important to understand that the bull markets in this case are getting shorter in the sense of their percentage gains. So the point here that I want to talk about is that we have to be less greedy than the other participants. And I know that might not make sense. It's like, Nick, being less greedy, wouldn't it be less greedy to pay a lower premium? And no, what I mean by this is that you have to be a little more eager to get back in than the other guy, to pay a little bit more of a premium. It's the other counter side of it, taking profits where you have to take in a lower price and be less greedy, right? If you're being greedy on the upside, you're saying, no, people are saying Bitcoin's going to 100K. I want it to go to 150K, 200K, or no, I think it's going to $1 million, right? And then if you get trapped in that mindset, then you're stuck never taking profits. On the other end here, paying a slight premium, right? And being more conservative on the estimations of that correction, making sure you get in on the opportunity. That's more important. So for me, a ballpark estimate where I'm going to start to do what's known as dollar cost averaging, which is basically just starting to average in with capital that I have over time, is around 65, 70%. And hey, if it goes down to 80%, that's cool with me. I'll keep averaging in, right? Because I know that I'm on the lower bound of Bitcoin's price history. Looking at data science models that signal Bitcoin's oversold. I'm happy to do a video, as I mentioned again, detailing this later on, but for the sake of time, we'll continue moving through here. And then outside of this, well, you can use technical analysis and charting indicators. I recommend, though, that charting indicators here are going to be much more useful on the weekly and monthly time frames for predicting where we are in a cycle. And one thing you guys can always use, it's not foolproof, there's no indicator that's foolproof, is you can look up on TradingView, if you search in the indicators tab, the SMS indicator. This is an indicator that we built for anyone in the cryptocurrency community to use. I'll go ahead and pull it up here, show you guys how to use it. So you go to TradingView, type in SMS indicator. You can use this one right here. It's created by Sandrox99, Sandeep, one of our good community members. And you can see here that broadly speaking, right, when we enter into a reversal here in the market on the monthly here from back here in this bear market and here in January 2018, it's a great signal here until we get enough confidence sign here, like we did here in April 2018, that the market's ready for a reversal. And it's not perfect. There's some periods where it dips. And as I mentioned again, there's never going to be a perfect indicator, right? People can build indicators to be perfectly custom to the history of crypto, and lo and behold, the next cycle is going to jank them up a bit, right? If they think that it's a perfect indicator, right? So again, these are some very important things to keep in mind, guys, and provide a very good framework. So I recommend you guys take a screenshot. take some notes on this, right? They're not the ultimate Bible to follow in this case, but they will give you 90 to 95% of what you need to know, and that's the most important thing, if you can stick to what's very important here. Now, outside of this as well, there is an important set of things here that I know are still probably on your mind. And you might be saying, Nick, look, I don't think crypto is selling off right now as a broad market. I think it's got ways to go from here. But I want to know how to take profits on individual coins. Well, I'm going to go ahead and give you guys two simplified approaches. You can use a hybrid of these two. You can even use other variables that you care about. But I'm going to go ahead and talk about what I call strategy one, which is modest profit taking, which you're going to hear about from a lot of traders in the market. And outside of this, well, momentum profit taking, which is a little more on the eye perspective about what you think the state of the market is and being able to time the market. Okay, so strategy one here, modest profit taking. Set expectations for multiples. Guys, as you all know, in crypto, there are a ton of opportunities to make 2x returns against Bitcoin, 3x returns, 5x returns, 10x returns, and in some cases, 20, 50x returns, right? We've seen that this year already. There have been some plays that do that. They are very far and few. But overall, when you're making investments in things, once you've done that fundamental due diligence, once you've seen the technical price action, you see that breakout, you're confident that breakout's coming, whether it is or isn't, right? You need to come in with, if you want to take the modest profit taking strategy, it is highly built around setting expectations for profit making, whether it's in percentages or multiples. And this is where you set limit orders. Once you've bought your position, right, you set limit sell orders where you're going to take profits at certain ranges of price. And what's really great about this is that you know that at certain price ranges, you're going to be disciplined. You're going to lock in profit if you're lucky enough for your position to get there, right? You'll not only have been proven right that, the price was able to go there, but you're going to materialize those profits. They're going into a higher, more liquid and less volatile crypto like Bitcoin, or they're going straight into USDC, USD Tether, or back to dollars in your brokerage or cryptocurrency exchange account. Plain and simple. A lot of people like this, but at the same time, sometimes you can end up taking profit too soon where you miss out on much higher returns and you kind of remain ignorant to the potential very clear momentum that's signaling that it might go higher, right? But at the same time, I can tell you guys that this works for a lot of people if you are more of a kind of beginner trader in this case and you don't know how to read the kind of momentum in charts. And don't feel any shame in that, right? There's some times where I feel I just want to go about doing multiples trading, right? And basically what's known as modest profit taking. Second point here is thinking in terms of market cap, right? So if you know, for example, that there's a project right now that really has a chance in this case, right? If you fundamentally believe in this case, and again, I wouldn't hedge your bets on all in one play, but if for example, if you're having like 10% of your crypto portfolio allocated to like a small cap in this case, right? It is much more easy for a small cap to multiply 20, 30x than it is for a large cap cryptocurrency, right? A cryptocurrency that's market cap is 200 million versus 20 billion, right? That 30, 50x multiple is more reasonable for the small cap versus the large cap. Doesn't mean it's going to do it. Not all small caps become large caps, but it is something to bear in mind, right? Understanding where the market cap of your crypto is and keeping in reasonable multiples, right? I would say that a large cap has a much more, a 20 billion cryptocurrency has much more likely of a chance to double or triple versus 20 or 30x, just to simply put it that way. And last but not least, again, setting in limit orders in order to take profits and close positions. I apologize for the typo. So closing on positions, right? So again, this builds on that point here. This is everything around setting those expectations, thinking about the market cap of the crypto you're investing in, and setting those expectations by actually setting disciplined sell orders. Now, if you don't want to limit your additional potential returns, right, and you're willing to take a little bit of additional risk, there is another way to do that, and it's momentum profit taking, right? So let's go ahead and talk about the 3 points here. So momentum profit taking, or momentum traders in this case, who might be swing traders like myself, who throughout the crypto cycles, the only kind of trading I really like to do is going in and out of the altcoin market. And then eventually at the end of the cycle, when Bitcoin's peaking out and when altcoins have peaked out and the market is exhausted and seeing general outflows of liquidity, right? I like to trade momentum in the market. I like to follow where the capital is flowing. I like to get into the positions either slightly ahead of time or hop in on the wave and know when to get out, right? And the whole point here is to watch out for euphoric parabolic price action, right? So again, going on, I mean, the Bitcoin chart here is a great example of this. When, for example, you start to see a change in that momentum, that to me is a cause for concern, right? And it's why, for example, in the dynamic here of what we've been talking about on the channel, as Bitcoin tends to lose a bit of momentum and turn sideways, what we tend to see is that altcoins really fare well. And we can see that by taking a look at altcoin dominance, or the percentage of altcoins, ownership within the cryptocurrency space, right? This past month, as Bitcoin's been stagnant, altcoins have popped up more than 10 percentage points here overall share of the market, right? A huge move on the monthly candle, right? And we can see here when we just take it to the standard chart here how big of a move this really is. We smashed through resistance here, historically speaking. So again, the important thing to bear in mind is that as we take a look over time at the signs here that we're starting to lose that momentum, we either want to reallocate somewhere else or consider taking profits, right? Again, it doesn't mean you have to go straight into another altcoin, but again, watching out, knowing when to lock in those profits on plays, right? For example, one of our large cap plays here that we've talked a lot about is Uniswap in this case, right? And what's really great about Uni is that as Uni, we built most of our positions back here in November, December, around $3 here in this case per coin, and now it's at around $41. For example, the momentum's really picked up here, but compared to a lot of cryptos, to me, this is still at a very good point here where it's not absolutely euphoric, right? Where it's not doubling its value, right, in a matter of 3 or 5 days. That's what you tend to look for in crypto. And I'll give some examples of this. One that I would say is very clear here is something like Doge. I know a lot of people, again, I don't mean to badger on Doge, but I mean, it's one that's relevant for a lot of people. When you see stuff like this, right, when you've gone from around 5 cents per coin to 45 cents, and then you start to have sell side price action like this where it drops back down to 15 cents. This is a cause for concern that when you get that lower high, profit taking is probably not a bad idea, or at least taking some off the table. Again, I want to emphasize that very, very clearly. The second one here is lower highs and lower lows. Again, playing that point of Doge here. 34 cents here, right, was the significant lower high that we set in from this general range up here around 44 cents. Right? Bitcoin as well, right, we can take a look at, has set in a lower significant high here. The first time it's done that, right, generally speaking, like on a really separate basis. And you can see here, guys, I'm not talking about the day-to-day, right? There are some lower highs like here, for example. But generally speaking, right, so far we have set in a significant lower low and a significant lower high. And so long as we continue to set in those lower highs and lower lows, that further confirms the trend here, that the trend is being broken. We originally had this parabolic line, and this again, not per se parabolic, but this nice line of growth here back from 20K to 65K, and now we're starting to break away from the trend. You can see the significant higher lows and higher highs. That trend is starting to reverse here. So again, lower highs and lower lows, one of the best things. And notice how I'm not using 5 different indicators. I'm just simply analyzing what the market, in this case the buyers and the sellers, what they're telling me. And they're telling it through price. But indicators can be a nice contribution to that as well. Bearish reversal patterns. Now again, not only in the sense of price, that can be a way that you can look for bearish reversal patterns. But for a lot of cryptocurrencies, you can have things like double tops, where price, for example, tops out at the same range. So I'll try to bring up some good examples here, thinking a bit off the cuff, because I think it would be good to show some good charts here in regards to what a double top can look like, or what some kind of bearish signs may look like. I would say that for probably for cryptocurrencies, let me think on it here real quick. Okay, so I just thought about an example here that I wanted to share with you guys when looking at the Ethereum USD chart back in 2017 and going into the later stages of the cycle in early 2018, right? This is a very simple set of price analysis here, right? One of the examples that we can use of double tops is right here at the peak of the cycle here in January 2018, when Ethereum had topped out roughly around the same range. Now again, this is where some subjectivity in this case can come with TA, and you need to have an open mindset here when analyzing the charts. But broadly speaking, a double top is when price generally tops out at around the same range here. You can see here that a big even level like $1,400 comes in to weigh down price here where sellers start to sell across most exchanges. Right. Whereas back here, when we had set in a high, we started to pull back and then we broke up very easily and the next day followed through on more upside. We saw 2 days here of stagnation, both here on this green candle as we revisited and set new all-time highs, roughly around the same area, but also started to see turnover here, right? I'm not saying that you sell the moment in this case that it hits those highs. You can't tell whether or not it's going to follow through like this or roll over, but after a day or two, you can start to realize, oh, wow, price is really starting to roll over here and face some resistance, right? Things are getting more choppy, more volatile. We're having these bigger dips, bigger rallies. $400 rally here on ETH is pretty massive, and we're starting to roll back over. Right? That's an example of a double top here. Whereas again, last time in the past, we would come up, rally through, pull back, rally through, right? And again, playing into some of the other signs we utilized, as you guys might notice, whereas ETH here have been building up a pretty sideways technical formation from May of 2017 to November 2017. It started to build euphoric parabolic price action. Doesn't matter if you're looking at the standard linear chart or the logarithmic chart. The momentum was building up more and more and more. And it made some phenomenal multiples after already rallying quite nice from back in December of 2016. Right? So these are some things just to keep in mind, guys. And we've kind of ran through the bulk of what I want to talk about today. But if you guys would like to see more content like this, I'm happy to dive through it. But to wrap up today's video, we got to take some time to take a look at our sponsored news mentioned for Morpheus Network. Now, for those of you who don't know, Morpheus is a supply chain logistics company in the blockchain space that we've been following as far back as 2018. And they have some really exciting developments about their actual software and technology. So Gulftainer, which is a very, very large supply chain logistics company within the United Arab Emirates, they recently ran a competition over the last 2 years, which is known as the Gulftainer Future Ports 2021 Challenge. They had over nearly 2,000 startups from across the globe in the supply chain logistics area and expertise who were competing to place in this competition to actually win. And what's really great is that Morpheus placed alongside 10 leading startups within the challenge, right? A 2-year challenge over 2,000 companies. So I think this is a major accolade here for Dan and the rest of the team at Morpheus Network. Now, to put it simple in this case, again, Gulftainer, if you guys are curious to learn a little bit more about Gulftainer's business here, the one of the major ports here, KCT, owns the world productivity record for having performed over 4,073 container moves in a single 12-hour shift. It's a massive port in regards to the United Arab Emirates. And that waterway does export a lot of major goods and services across the world. Now, what's really cool here is that this starts to show here that companies like Morpheus, which bear in mind, again, as we've been covering them since back in 2018, they've been continuing to build in the bear market and into the bull market, improving real use of technology. You guys are welcome to read through the actual PR announcement if you guys want. You can check it out on their blog here on Medium. But outside of this as well, there's a lot of really interesting things to learn about Morpheus. So if you guys haven't already, check out their website here, learn more about their product. They not only have some great information about all the major services that they provide, but one of the key things that they stand out about, and I think this is again where they come in and probably a big reason why they won the challenge, is the fact here that they have so many different integrations from major providers like DHL and FedEx to Swift, Ripple, Salesforce, Oracle, Microsoft Dynamics, UPS, as well as other payment networks like Stellar and Oracle networks like Chainlink. So I highly recommend you guys take a look at the Morpheus Network. For me personally, they're one of my favorite projects within the supply chain logistics area of cryptocurrencies. And I know that Dan and the team have been working extremely hard. But I gotta say, hats off to them for winning this challenge here for Gulftainer. This is a really big accolade for the team. And again, I highly recommend you guys do some more reading into the project if you're interested. I'll leave a link down below to their website in the description. That being said, everyone, thank you all so much for watching this video. If you enjoyed the discussions that we had around understanding all the concepts around profit taking, please consider dropping a like, consider subscribing and hitting the bell icon if you haven't already. It means the world to me, guys. It's the best thing you can do for this channel. And again, share with a family or friend member. I know you guys have some people out there who are going through the same exact thing. And the best thing we can do is share quality information that's going to help them to adapt to the market and better learn how to spot those moments when it's time to take profit. That being said, everyone, thank you all so much for watching. I hope you have a phenomenal rest of your week, and I'll see you all in the next video. Take care, everyone.